Hello, everybody. So today I want to talk about the payments sector. So payment stocks, buy now, pay later stocks, as well as AI lending type stocks like Pagaya and Upstart. These in my spreadsheet are all grouped together in one category, and I kind of compare all of the numbers. So I updated this part of my spreadsheet today, and so I kind of want to walk you through and see if there is, by chance, one clear winner, which in my view, there is. So I'll get to that in a second. In my view, there is a winner in this spreadsheet. So let's get started. Again, the updated numbers here. So first of all, let's talk about Shift 4. Shift 4, the stock dropped a little bit since Jared Isaacman was chosen again to go to NASA, so they lost their CEO. It's as though Shift 4 was the side project of this billionaire. Shift 4 is actually a very interesting company. It's doing well. Growing revenue 27%, next 12 months predicted to grow revenue. Gross margin 32%, EBITDA margin 18%. It's optimized. We have a rule of 40 at a 47. And EV, enterprise value over gross profit over revenue growth, is a 0.27. So slightly cheap, not very cheap, right? I prefer Remitly, for example, or Sezzle, which are much cheaper, but slightly cheap if you compare in the grand universe of stocks. But anyways, they lost their CEO, and I don't think the business is too differentiated. I think the differentiation is very mild for this type of payments business. So, if it was twice as cheap, maybe. Right now, no. Let's talk about another stock now. Let's talk about StoneCo. So StoneCo is a former channel favorite, which I sold for tax loss harvesting reasons, and moved on to other stocks, moved on to better stocks. But I'm glad to note that since I sold this stock now more than a year ago, it nearly doubled since I sold it more than a year ago. So the stock has actually done pretty well. But StoneCo right now, when I look at the valuation of StoneCo, STNE, right, is how they pronounce it. When I look at the valuation, I'm like, okay, it's a 0.51. I think this stock has gotten expensive. This stock did spend their cash pile a little bit, so I would like that a little better. They spent a little bit of their cash pile, so I like to see that. But EV over GP over RG over 0.5, that's slightly more expensive than 0.5, which is really my cutoff. I really don't want to own a stock more than a 0.5. So I find StoneCo too expensive. Moving on to DLocal. So DLocal, it helps small business. And by the way, StoneCo is essentially like a Shift 4, but for Brazil, in the Brazilian market, essentially, or like a Square terminal for Brazil, the Square of Brazil. I used to call it StoneCo. DLocal helps mostly Western companies like your Netflix, your Microsoft, sell their subscription plans in all sorts of emerging nations, in Latin America, in Africa. So it's kind of like a payment aggregator. It helps you to walk to the grocery store and pay for your Netflix bill at the grocery store somewhere in Uruguay or whatever. I exaggerate, but that's essentially what DLO does. DLO is slightly cheap at 0.33. They achieve a rule of 40 at 49. That's good. Predicted to grow 28%. That's very good, by the way. Shift 4 also predicted to grow 27%. Very good. StoneCo, one of the main reasons why I wouldn't like StoneCo and why it scores so poorly in my spreadsheet is because the growth is gone on StoneCo, by the way. 6% predicted to grow. It doesn't grow nearly enough. So I much prefer DLO or 4 over StoneCo now. So I like that growth. I think it's interesting. I'll put a caveat for DLO though. This company has been under attack by short sellers relentlessly, so be very careful. It's been very sensitive to short sellers. So you could own the stock, pay $15 for it, and all of a sudden a short seller out of nowhere writes a piece, and then the stock halved. And it's done that many times. DLocal has done that many times. So I would be quite careful, and you can see it on the chart. Like you can see these epic dumps. Like that's a short seller right there. So I would be careful. These stocks have a thin float and they get manipulated at times. Let's move on to Paycom. I have no idea why Paycom in there, except to make other stocks look good. If the stock doesn't achieve a rule of 40, we're at a 36. The stock EBITDA margin, I mean, come on, like STNE has 51%, Visa, Mastercard have 70%, so 26%, that's not that impressive. The growth is only 10%, so that doesn't get me out of bed, 10%. And it's a payroll company. I mean, think about the competition in that space. It's the payroll company, so no, I would not be interested in Sony, in Paycom. Let's treat Visa and Mastercard together. These are the cash machines of the 20th century. These stocks were outstanding in the 20th century. But you know, they could have Solana coming for them, I guess is what I'm gonna say. So I would be pretty careful. Yes, they transact tremendous amounts of payments volume. Yes, they are, accepted by most people in the West. Not necessarily true in Asia. Like you go to Asia, it's not the case everywhere, but in the West, they're pretty much accepted everywhere. They are extremely mature. That's why they grow at 11 to 14%, and I consider that growth to be simply the end of cash. People are using less and less cash and using more and more cards, and so they're taking advantage of that growth. But it's not an outsized growth compared to the sector, in my view. And of course, and this will be a surprise to nobody, I find this valuation to be nosebleed. 1.55 and 1.18. Out of all of the payment stocks, these two stocks are 3 times more expensive than like the third best, essentially. So it makes absolutely no sense to me. Clearly, these stocks are being propped up by the indices. It's the same story as Walmart, same story at Costco. Walmart, Costco, right in the crosshair of disruption, trading at lofty PEs. Visa and Mastercard also right into the crosshairs of disruption, trading at lofty PEs. I do not understand the valuation of these companies. They are extremely profitable right now. So they're literal cash machines, 99%, 98%. That type of gross margin is the opportunity of stablecoin. Not to mention, you have companies like Amazon who dream of getting rid of Visa or Mastercard. They dream, every single online payments platform dreams of getting rid of credit cards. So to me, I would stay away. Moving on to Dave. So Dave is kind of like a comparison website. They do a little bit of banking. I don't really understand it too much. It's a portal, perhaps for lower entry level banking. Dave, I think, was perhaps even more misunderstood in the very beginning. Dave, when I look at the chart, I mean, this is absolute insanity. In 2023, the stock was $8. Now it's $200. So I mean that's the very definition of chasing here. I would, and it can show you how inefficient the market, because this stock was trading at 300, then it dropped to 8, and now it's back to 200. This market is insanely inefficient. Don't really know too much about what's going on with Dave. Yes, the rule of 40 is doing good at 67. That's excellent. The stock is slightly cheap at a 0.31. The revenue growth is good at 38%. But, I'm uneasy looking at a stock who's up 130% in 12 months. Everything means reverse. That's point number 1. And then point number 2, it's not the cheapest in this spreadsheet. We have a clear winner, which I'm getting to in 2 spots. I'm getting to the clear winner. So anyways, even though this is a sector I don't really have to be in, yeah, it looks compelling. It's more compelling than 4. It's more compelling than DLocal. Definitely more compelling than Paycom, Visa, or Mastercard. Much more compelling than StoneCo, but perhaps not as compelling as Remitly and Sezzle. So, Remitly, let's talk about Remitly. Remitly is a remittance company. They are trying to disrupt Western Union. Of course, you are MoneyGram and all that sort of stuff. You will see the problem with that is that just like Visa, Mastercard, Paycom, so many of these companies, they are, in my view, they are threatened by stable coins eventually. So that's point number 1. But as long as the whole world isn't dollarized, they will still have a business. And I think they have enough of a runway. And it's a remittance company who is very cheap. Enterprise value over gross profit over revenue growth is 0.1. In fact, it is the cheapest stock in my spreadsheet per my favorite metric. Revenue growth is excellent. Next 12 months predicted to be 27%. Gross margin is also very good at 59%. And the EBITDA margin is lacking at 3%. But here's the thing. I've been updating this spreadsheet for a while, and I can tell you that this used to be negative. They are seeing leverage in their EBITDA margin. So I wouldn't be surprised if this stock had 15 to 25% EBITDA margin in the near future, like in the next 12 months. And if that were to happen, we'd be at a rule of 40 above 40, which is kind of a threshold I look at. So it might be interesting to take a position in this one before it re-rates as it inevitably grows its EBITDA margin. If you look at the stock, it's been dismissed for 3 years. It's been at its own valley of despair for 3 years. It could get out of that valley of despair. I like Remitly. I would say Remitly is my second favorite in there. My first favorite in the sector is Sezzle. Sezzle is great. There's no way to put it. It's the company that grows the fastest out of all of them. Okay, it is, I guess, the third highest EBITDA margin after Visa and Mastercard. But as far as startups go, it is the highest newer company. I mean, for that small cap, it's the highest EBITDA margin I've seen. It's the second cheapest stock in this entire spreadsheet at 0.16. It's the highest rule of 40 at 111 and rule of 40. So nearly 3 times the rule of 40. And it has run a little bit, but it hasn't run that much. It doesn't run that much. If you look at it, the stock was $182 in July of 2025. Now it's 73. It has not run that much. You're still getting it like 60% off. So I like that very, very much. And I like that it is in buy now, pay later. The buy now, pay later business, of course, I think stablecoins are going to be a big deal, but I think credit is always going to be a thing. People are always going to want to consume more than their paycheck allows. And a lot of younger people do not believe in credit cards. They hate credit cards with a passion, perhaps thanks to some, influencer called Dave, if you know who I'm talking about, right? They hate credit cards with a passion, and that explains the disruption of credit card companies by buy now, pay later firms. And it's a pure play buy now, pay later, unlike PayPal or unlike XYZ, who are kind of like stuck with companies that grow much, much, much smaller, and you have a hard time getting access to the pure play. It's the fastest growing pure play buy now and pay later. I like it very much. I would argue the valuation is so cheap because we don't know Sezzle as much in the United States. They have a bigger presence in Europe and bigger presence in Germany, but they're growing very fast in the United States. AFRM, of course, is the pioneer of this sector. AFRM, Max Levchin, member of the PayPal mafia, former friend of Elon Musk, maybe they're still friends. Disruptor created the space. It's the premium buy now, pay later company in the field, growing at 30%, growing less fast than Sezzle, but enterprise value over gross profit or revenue growth is a 0.62. So it's a little pricey, it's a little expensive, and rule of 40 is a 41. It's a little lacking. Moving on to PayPal now. PayPal, of course, is not going to look very good in my spreadsheet at all because it's only growing at 6%. PayPal also has a small buy now pay later offering in there, and they have a PYUSD, PayPal USD stablecoin, which just had a partnership with Solana. I would say the thing I found the most exciting about PayPal is their PYUSD works and what they're doing with the stablecoin business. But again, you gotta buy the stablecoin business, and also you gotta buy slow growth Venmo, which competes against slow growth Cash App. So I think these apps are mature. I think these companies are mature. They moving on to Cash App. Cash App is the same thing. I think Cash App is pretty mature. I think Venmo is very mature. I think Cash App is doing better than Venmo. I think Cash App is beating Venmo, but still a lot of people still use Venmo, and they're just mature companies. PayPal is mature. Square payment terminals are mature. That's why they're only growing 6 or 7%. That's less than the bare minimum 15% monetary inflation, right? And so Cash App, of course, is not going to look good in my spreadsheet, 0.56, because it's not growing fast enough. And the rule of 40, how can you achieve the rule of 40 if you're only growing at 7%? Well, it's much harder if your EBITDA margin is this low. So I would stay away from these two right now. And then I conclude this video with the AI deciders, I'm going to say. These two companies, Pagaya and Upstart, they are trying to move beyond credit scores in order to have better risk models, and they are partnering with banks to try to help banks better assess risks of borrowers by moving beyond the credit score. And of course, Pagaya focuses on more established banks. Upstart does this a lot of in the car lending business, a lot of exposure to the car lending business. These two stocks are very cheap, actually. They're about equally as cheap, whether Pagaya or Upstart, 0.2, 0.24. The rule of 40s, they're at 43 and 42. So that's pretty good from this standpoint. Pagaya goes a little slower at 23%, but has a higher EBITDA margin. The other one goes a little faster, but has a lower EBITDA margin. Perhaps I will give the advantage to Pagaya because really the car lending sector is not a sector that I want to be exposed to whatsoever. But Pagaya unfortunately ran a little bit. So AI and lending models, is AI a moat? Is AI not a moat? That's another question you have to answer if you're interested in AI lending. Right now, when there is such an obvious winner in this sector, which is Sezzle, I'm not going to spend a lot of time analyzing Pagaya or Upstart. I do think Sezzle deserves my custom time, a custom video. It deserves a custom video. Let me know if you would like a full analysis on Sezzle and perhaps on Remitly. Let me know in the comment section. But anyways, this was it for this spreadsheet. One clear winner, yes, to me, the clear winner in there is Sezzle. It's got all of the hallmarks of a possible great stock success, a great success in the stock, especially at a discount. It is at a discount now. 73, it was 180. So I like it. I like it very much. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.